Well, happy Monday to you. My name is Eric Hagen with Next Financial Group. Just a quick reminder before I get going with this week's update. Tomorrow is our monthly retirement income luncheon right here in Eden Prairie. We'll be talking about how you can use high-quality Class A commercial office space to help fund your retirement income. So if that's of any interest to you, please do go to the website and check and see that. I know there are a few tickets still available. We'd love to have you out again tomorrow right here in Eden Prairie. So on Friday, May's unemployment report threw Wall Street for a loop. Economists polled by Reuters forecast a payroll gain of 150,000, but only 69,000 new jobs were created. Even worse, part-time positions accounted for all of the increase. The jobless rate ticked up to 8.2% in May, and the Labor Department also downwardly revised April and March job gains by a total of 49,000. All this has analysts wondering if the recovery is losing its momentum and if the Federal Reserve might rethink its stance and announce further easing at its summer policy meetings. Consumer spending rose 0.3% in all of April. That gain was complemented by a 0.2% rise in consumer incomes. The Commerce Department's Personal Consumption Expenditures, or PCE, price index showed a 1.8% annual increase, in line with the Fed's inflation target. The personal savings rate was at 3.4% in April, matching the 4-year loan seen back in February. So the National Association of Realtors reported a 5.5% drop in pending home sales for all of April, but also noted a 14.4% annual gain. March's S&P Case-Shiller Home Price Index showed a 2.6% 12-month decline, which is the smallest since December of 2010. The Institute for Supply Management's April Manufacturing Index fell 1.3% in May to 53.5, yet its new orders sub-index hit a 13-month peak at 60.1. Construction spending rose 0.3% in April, with the Commerce Department noting a 6.8% annual gain. Well, June is off to a rough start in the markets. The Dow lost 275 points on Friday as investors came to grips with May's weak jobs report. The Nasdaq ended the week down 12% from its March 26th peak, while the S&P 500 was off 9.9% since its peak on April 2nd. The weekly performances in the markets are as follows. The S&P 500 last week was down 1.33% to 1278. The Dow Jones was off just over 2%, closing at 12,118, and the Nasdaq was down 1.13%, closing at 2747. Turning to the NYMEX and COMEX, gold climbed almost 3.4% last week to settle at $1,622 an ounce Friday, and oil dropped almost 8.5% in those 5 days to end the week at $83.23. If you saw your portfolio rise the first part of the year, and only to see all those gains wiped out here in May, in this last month of May, and you're looking for a way to perhaps protect those gains, I invite you to go take a look at www.adaptmyportfolio.com. Again, that's adaptmyportfolio.com. Alright, so here's what we're looking at this week. Today brings a report on April factory orders and first quarter results from Dollar General. Tomorrow, the May Institute for Supply Management Service Sector Index arrives. Then on Wednesday, the European Central Bank weighs an interest rate decision, the Fed issues a new beige book, and more earnings come in from Hovnanian and Pep Boys. The Bank of England makes a policy statement on Thursday, and then stateside, Ben Bernanke testifies in Congress, and new initial jobless claims numbers arrive. And wrapping up the week on Friday, the Commerce Department reports the U.S. trade deficit. That's what we're looking at this week. My name is Eric Hagen. I'll keep my finger on the pulse of the economy and report back to you next Monday. So please do subscribe. We'll chat with you then.